Is Warren Buffett predicting a crash? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Business Insider Australia discussing Warren Buffett's favourite market indicator and asking the question, is it signalling a stock market crash? Because, you know what, I'll bring up trading economics right now, because if we have a look over in the US, the market, once again, is just going crazy. The Dow Jones is nearly at 30,000. There you go. You know, just a touch off an all-time high. The S&P 500, there you go. I mean, is that an all-time high? I think it is. Yep, an all-time high. The Nasdaq, yeah, looks like it's an all-time high as well. And then if we look at the Forex, the US dollar is not doing too well against other currencies. The Aussie US, we're now sitting at 74 US cents, everyone. Remember we plunged down to 50, you know, what is it, 57 down here? Look at this. Are we going to head up back to over $1? It's just, is Peter Schiff right about what's going on with the value of the US currency? So let's have a look at this article about Buffett's favorite predictor and see. So Warren Buffett's preferred market indicator is approaching a record high, suggesting stocks are overpriced and could tumble in the near future. The Buffett indicator compares the total value of the stock market to quarterly GDP, gauging whether it's overvalued or undervalued relative to the size of the economy. The ratio climbed past 180% on Tuesday, not far off its 187% peak in the second quarter, when GDP was 8% lower. Buffett praised the gauge as probably the best single measure of where valuation stands, and calls it a very strong warning signal of an upcoming market crash. And we can see it here. There you go. There's the total market cap to US GDP, and I got these from Stock Market, I think, Guru. I'll link to it in the referenced pinned comments. But you can see here we're at 180.7%. Pretty high. It just shows you we're in a clown world at the moment. And here we have, this is the total market cap, and currently it's up here. And this is GDP. You can notice when it's shot up, when the market corrected, when it shot up, when the market corrected. Right near as well, you know, look at the GFC right there. What's going to happen with this? What's going to happen with this, everyone? Look at that. Just compare it to historical precedent. So, Warren Buffett's favorite market gauge is flirting with a fresh high, signaling stocks are overvalued and could plunge in the coming months. The Buffett indicator divides the total market capitalization of a country's publicly traded stocks by its quarterly gross domestic product. Investors use it as a rough measure of the stock market's valuation compared to the size of the economy. The Wilshire 5000 total market index surged in value to an unprecedented 38.2 trillion on Tuesday, while the latest official estimates for third quarter GDP are at US 21.2. Dividing these numbers shows the Buffett indicator is clearly 180%, not far off its peak of 187 in the second quarter, when GDP was around 8% lower and a big jump from its 170% level in early November. Buffett describes his namesake gauge in a Fortune magazine article in 2001 as probably the best single measure of where valuations stand at any given time. The famed investor and Berkshire Hathaway CEO added that when the ratio spiked to a record high during the dot-com boom, it should have been a very strong warning signal of an impending crash. The Buffett indicator also surged in the months before the 2008 financial crisis, giving it a solid track record of predicting market downturns. However, the gauge is far from perfect. Comparing the current value of stocks to the previous quarter's GDP isn't ideal. US-listed companies don't necessarily contribute to the American economy, and GDP doesn't account for overseas income. The COVID-19 pandemic has also caused massive disruptions to economic activity and temporarily depressed GDP, boosting the Buffett indicator's readings in recent months. However, stocks appear extremely expensive by several other measures, suggesting the gauge isn't widely off the mark. Here's the St. Louis Fed's version of the Buffett indicator. Both market cap and GDP are indexed to the fourth quarter of 2007. Well, there you go. So there we have it, everyone. Warren Buffett's market indicator predicting a significant price crash. Now, if we jump and have a look, I mean, look at the Dow Jones, everyone. If we look at this, we'll bring this to 50 years. I mean, there you go. We're pretty high. We're at an all-time high in the midst of high unemployment, in the midst of a global pandemic, in the midst of tourism on the global level down the gurgler. If we look, let's look at our own market here, the ASX 200. We're sitting at 6,590. So we're still not at all-time highs, but we'd reached it, and we'd had a correction. And our GDP is still, though, it's now coming, a little bit higher. We'll have to see what's going on here. So, guys, let me know your thoughts and opinions in the comments down below. Do you think this indicator is useful? Do you think it's useful? Do you refer to this? Do you think we're going to see a market crash, or are we just going to see more? Or is this a demonstration of the beginning of inflation in the value of these assets? Because when you have the candle-on effect and money is injected into a system, where does it end up? That's where you get a bubble. In the US, it's a bubble in the markets. In Australia, it's a bubble in something else. It's a bubble in, and I'll bring this up, in our property sector. They're doing everything they can to stimulate our property here in Australia. That'll be interesting to see. Well, let me know your thoughts and opinions in the comments down below. Are you a fan of this indicator? Do you think Buffett's on the money? Are we going to see a correction in the market? Or do you think, it's a different world right now? Profits and comparing GDP to big companies doesn't matter. We'll have to see. Hang on, that's not what I wanted to do. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or Kucoin. You can buy them also using AussieBroadband. You can buy our merch from HeiseSays, pocket squares we hand make ourselves. You can also support us using Teespring with the mugs and things you'll find on the YouTube channel. Finally, we've got Gold Pass from the Perth Mint and PayPal as well. Take care, everyone. Have a great day. I'll see you next time.